Hello and welcome to our viewers on cruxinvestor.com and also to our listeners on Cruxcast, our new podcast series. We're here today with Steve Letwin. He's the CEO of IAMGOLD. Hi Steve, how are you?
I'm great, Matt.
Fantastic. Thanks
for having me.
Well, it's good to have you here in London, right?
It's great to be here.
You're on a world tour. You're off to Africa shortly.
I'm off to Africa. I just came from our mine in Suriname.
Oh, really?
And I was there for a week.
Wow, that must be...
It's great.
Love it.
It's a 300,000 ounce producer and
right.
Growing. And no, things are very good there.
And then where else are you off to next?
I'm West Africa, then I'm back to Canada. Yeah.
Wow.
Yeah.
Wow. You spend a lot of time on
I spend a lot of time at the sites. I go to the sites at least 4 times a year, every site.
That's interesting. So you're not one of these sort of remote, do it on a spreadsheet kind of guys. You like to go and actually see what's happening on the ground.
You don't make money in Toronto. You make money at the sites. And my view is if we're going to ask people to live at these sites, then we should be at the sites.
Fantastic.
So I stay at the site. I spend up to a week at the site. I eat in the cafeteria. I drink the coffee. And I listen to our employees.
Well, that's great.
Yeah.
You must pick up a thing or two there.
I pick up a lot.
You're a big employer there, I'm guessing.
Yeah, we have, with contractors, we have 2,000 people.
Right.
So,
and I imagine the tax as well must contribute to the community.
We've been an operator there,
yeah.
Matt, for 15 years.
Right.
When you consider the payroll tax, when you consider the royalties taxes from the mine
yeah.
and the spin-off, it's $4 billion.
Wow. Net contribution.
Yeah.
Wow.
For a country that has 500,000 people.
That's phenomenal.
It is.
I didn't realize it was that big. Can you give us a 2-minute summary of IAMGOLD? I know it's a huge company, but see if you can encapsulate what it is that you've got there.
Well, the best way to describe IAMGOLD is that it's reinvented itself. So when I joined the company almost 9 years ago, low-grade mines in what I would call higher-risk districts. Mm. And I got headhunted out of Enbridge, where I was in oil and gas, running the U.S. operations and international. So they liked the commercial success I had at Enbridge. Yeah. So they brought me into IAMGOLD to quote unquote reinvent it. It was struggling, and we have.
What did you come in as? Is it operational? President CEO.
And we have a fantastic Chief Operating Officer, Gord Stoddard. We have a first-class, world-class CFO, Carol Van Ducci, Jeff Snow. All these people have significant mining experience. I was the one with the resource experience, not the mining experience. But what I think I brought, and I think demonstrated, is the commercial side.
Well, I guess that, because one of the numbers I saw stood out on your website was the cost-cutting exercise that you've been through. I mean, it's a big number.
It is.
Tell people how much.
Well, we were running our all-in sustaining costs. The accountants use short form it to AISC, was running upwards towards $1,600 an ounce. You know, when gold was at 2,000, we were making money. Our stock was
however,
right. So when it turned and went south towards 1,000, we were the first movers in cutting costs, and we brought our overall AISC down to 1,050. And this was off forecasted cost growth that, as I say, would have obliterated our balance sheet, our shareholders.
Yeah.
We sold assets. We have historically carried somewhere between 700 and 800 million in cash on the balance sheet. We have no bank debt.
That's today's number?
Yes.
Right, okay. That's a lot of cash.
Yes, it is.
A lot of dry powder.
When you look at our company compared to any mid-tier, other 16 mid-tiers, our net cash position is the strongest of any company.
Yeah.
So
why?
Well, I'm 63 years old, and I say to people I've been to Vietnam. And what I mean by that is I went through 6 down cycles in the oil business. Yeah. And you know, when I had success at Enbridge, and they decided to send me to charm school, so they sent me to Harvard.
It worked. That's the good news.
According to other people.
Right.
But thank you for saying that.
Right.
But so I went to Harvard for 4 months. I was 50 years old, and I took one thing away, which I probably already knew, but it was reinforced.
Right.
Never run out of cash. And when you're in a commodity business, you don't want to even look like you're going to run out of cash, because the mezzanine financing that comes with it, the cost of it is so destructive. The equity raises are so dilutive.
Yeah.
You lose your company.
For sure.
And so when I got to IAMGOLD, and again with the help of Carol Banducci, who is a world-class CFO, we've built that balance sheet up.
And that mentality.
Yes. We do not.
Because I remember back in 2012, 13, these were difficult times when obviously the price of gold changed.
Yes.
But the mentality was, there was so much money around, it didn't matter about the little stuff. Your attitude was, well, actually, it really does.
I went into the Montreal office, we cut 76% of our staff.
Right.
In
real quick.
2 days.
Okay.
Terrible times. Toronto, 33% cuts. Sites, 26%.
Right.
Brought down our costs. No one, unless you're traveling to these remote places, you travel economy.
I think that's fascinating, because when I look at large multinationals or billion dollar plus type companies, a couple of $1 million, it's got to come from the top. Yeah. That mentality of travel economy. You don't need to spend that. Or, as I've often heard the phrase is, if it was your money, would you spend it? And quite often the answer is no. But the big company mentality is kind of curse, right, in a way. And so you came in day one and said, right, something's got to change here. Right.
So 2016, we were the best performing stock on the TSX. 2017, we're the third best.
Right.
And we started that voyage in 2013 when we started to cut costs. So our stock went up 486%.
Well, I can remind you the number. The number on your website, 175 million.
Yeah.
From 2013 onwards.
Yeah.
That's a big
So
number.
we had a lot of people make a lot of money. We've seen a lot of Asian interest in the stock. So these same shareholders or investors that I had in oil and gas, I would say 11% of our shareholding at IAMGOLD are these investors. So when you look at the support we have and the belief and the commitment, it's there. And this is money that doesn't turn over every day and doesn't turn over every month. They're long-term investors.
Well, I mean, maybe we could come on to that, because we'll ask about shareholders later in terms of behavior, etc. But I just want to stick with the thinking, because this is the fascinating bit to me and a lot of people. We don't normally get access to the thought process. So you come in, you realize that gold price is on the way down, your ASIC is too high, something's got to change, you're making big swathing cuts. So how do you go into a large organization like yours? I mean, because I think at the time, I don't know how many billion it was, but there's a lot of different moving parts.
Yes.
So how do you compartmentalize that?
Probably the best example I can give you is when I first came to the company, our administrative staff was looking to move out of the building we were in. We're in the old Simpson Tower,
right,
in Bay and Queen Street.
Yeah.
And the HVAC is terrible. The offices are old, and this is no criticism of who is there, because they're gone now. Mm-hmm. But they had a schedule to move into the TD Square, and I said that's not happening, because we're going to increase our corporate costs by a factor of 4 by moving into these taller buildings that have more glass, and look pretty. And there was a sort of a shock. And I said, look, I was born and raised on a farm in southern Ontario, and I lived with 2 brothers and 3 sisters in a farmhouse. Yeah. And when beef prices fell, you cut costs. And so it's no different.
Same rules apply.
Cut.
Yep.
And you lead by example. I flew economy. Where we could, we doubled up in the hotels. We spent as much time at the camp as possible, so we weren't paying hotel bills. If you wanted to go to dinner, you pay for the wine. Yeah. I'm not signing expense reports for $400 bottles of wine, which they had gotten used to. And so all of those things,
Yeah.
and again, this was caused by the fact that gold had gone up so quickly.
Yeah.
People started to party, and we had to stop the party.
Yeah, they lose their minds.
Yeah, we have the lowest G&A per ounce of any gold company.
Okay, I interview a lot of junior companies, right? And I ask them, "Have you got a business plan?" 9 times out of 10, no, we're going to drill holes. That's the business plan, right there. Okay, with a large corporation with thousands of employees, there needs to be some rigor, organization, process. So with these departments, different departments, and you're going around cutting costs and stuff, were you setting targets? I mean, how do you target people? How do you make them accountable?
I learned a lesson from a fellow named Howard McDonald in the oil and gas business when Dome Petroleum got into trouble. I was 25 years old and I got hired to be his assistant. And when he came from Scotland, he said to me, "Steve, the first thing I want you to do is have all the expense reports audited."
Yeah.
So when I came to IAMGOLD, I had every expense report audited. And
for you nervous people?
a lot of people that weren't there a month later.
Right.
The abuse that had grown into the system.
So systematic abuse. Right.
Not
unusual at that time.
No, not unusual. These are human beings.
Right.
Dental work.
Nice.
Trips.
My best one on a set of expenses, scuba outfit. Which was a good one. It was inland project, so it's pretty good.
And we've carried that practice. So every quarter, the expense reports of the top 10 officers are published for everybody to see.
Right, that's interesting.
And my expense report is public information. And so the cost of the hotels, the cost of the meals, the cost of the limos, taxis.
Right.
I'm not going to ask people to do something I'm not willing to do. And that was the culture we started. And, they're good people. It's just that bad behavior had developed in frothy times. So when we cut all that back, we still live to that mantra. And you have to watch it, Matt, because it'll creep back too.
It will. It's just human nature, as you said earlier, right?
Yeah, and I'm no different than anybody. I have to check myself and say, hey, wait a minute now.
Yeah.
So
that's the cost cutting side, and as General Motors will tell you, there's only so much for that you can do before it goes wrong. So you like the entrepreneurial spirit,
right?
Okay, that's a great phrase.
Right.
It's also something severely lacking in large institutions. So do you try and encourage that within your people too, in terms of you give them some rope, but then you need to measure or set them targets to success targets.
Right.
So, I mean, what is the culture there in terms of, we understand cost cutting, what about growth? How do they go about doing that?
So if you go to our website, you will say empowering people leads to extraordinary performance.
Right, I hadn't seen that. That's a great line.
And so that was the line I brought. And, people say, well, where did you get that from? And I'll say, I got it from my mother and father. Because when I was 15 years old, my father went back to school. We lived on a farm, 6 kids. Yeah. And my father had no choice but to turn the farm over to my brothers and my sisters. And we had to run this farm for 3-4 years while he went back and got his university degree.
Right.
So he empowered us.
Yeah.
And so when I was in the oil and gas business, came in the mining business, we empower people to do. We never compromise safety, and you never abdicate responsibility. But we say to people, look, if you see a better way of doing things that doesn't compromise safety, do it. And that has been extraordinary. And the other thing that was happening, you talk about costs. The other thing that was happening at IAMGOLD, because of the run in the gold price, was that we were 95% long cycle focused. So we spent in 2012 $167 million looking for pachyderms, looking for the deposit that was going to eliminate our depletion. It was insanity.
Right.
And so we took a flamethrower to that number.
What was the check moment? You're like, hey guys, wait a minute, this is not working. I mean, hundreds, that's a lot of money.
Yeah.
Right? So you must have just gone, we need to change. So,
Yeah.
I mean, what was that conversation?
Well,
who was that between?
It starts with the change in leadership, where if they don't come on side, and I was lucky that people came on side pretty quickly. We're blessed with smart, hardworking people.
Yeah.
But we had some pockets where people believed that they had to keep rolling the dice or we would die. And we went to a short cycle focus. So around Rosabelle and Suriname, we started to do near mining exploration. We expanded our concession. Essakane, same thing. Westwood. And we had some focus on long cycle, which was Côté. And you have to have some long cycle. But we turned it around completely. We went for a much more emphasis on the short cycle.
Right. So I'm liking this short cycle idea because it's small controllable steps in your evolution, as it were, and clearly working. You're sitting on a lot of cash today.
Right.
You're not spending it. Okay. So we got to bring this back to IAMGOLD, regularly, but I do want to talk more about your thinking because that's fascinating. So IAMGOLD last year compared to this year. It's obviously
very tough.
Yeah, it's been a tough year.
We're skating through first quarter last year, best quarter in the company's history. We were trading at 850 Canadian. We won the finance deal of the year at PDAC with Sumitomo.
Right.
I won, which is always a curse, I think. I won our CEO of the year, highest returns for pay of any CEO in Canada, 100 CEOs.
All good. So you're at the top of this mountain,
Jesus,
looking down.
Oh God! And
then it hits you.
And then we started to get headwinds at Rosabelle.
Yeah.
Third quarter was tough.
Headwinds were caused by
labor issues.
Right.
The guys saw how well the company is doing, and then wanted a piece of it.
The curse of money.
Oh yeah. And the other headwind was gold price fell from 1350 to 1180.
And that makes a difference because that's people need to remember that's a large percentage of your margin just going there.
We're a very high cost producer relative to others.
So as a percentage of your margin, that $200 that pretty much wipes out a lot.
Here's the other thing that affects us. 35% of our shares are held by passive investors.
So they're sitting there holding these things, which
Quant
affects
funds.
liquidity, volume, trading, etc. Okay.
Don't vote. Don't send in proxies. Don't take meetings.
Yeah.
High frequency traders that look at your quarterly results and either buy or sell on it. And by the third quarter, we got hit hard.
Yeah.
Our quarter was.
You know who buy?
Pardon?
Do you know who buy?
Oh, I do.
Okay.
And I don't want to mention.
Sure. But
they're still shareholders.
But did you have a conversation?
They don't talk to you.
Right. They don't have to.
They don't.
Yeah.
It's very simple.
You know the rules.
Yeah. They show their shareholdings.
Yeah.
And as they say, they don't take meetings. So we behave very well.
Yeah.
Whether it's high gold prices or low gold prices, we have a very high volume of trading, and they love us.
Yeah.
They model us, and if we're not in that zone, they'll sell us. And
that's what happened.
That's what happened.
Right.
We had one quant fund at the end of the third quarter sell in total 12 million shares, literally in a week. And we dropped 21%.
Yeah, I bet.
Choom, like that.
Because someone thought someone knew something.
And then you set off circuit breakers.
For sure.
And you were in the game.
Yeah, been there, done it. But then the retail go, what's happening?
Yeah, the retail say, well, nothing's changed. Why is this happening?
Yes, they don't understand why, but it sets off a series of events.
Oh, it sets off panic.
Yeah.
Because you're a retail investor
right.
who has made a lot of money with the company, and all of a sudden, you're losing.
Yeah. But anyway, so those things happen. So last year, coming through this year, you are where you are today.
Right.
Okay. So how would you grade yourself in terms of last year? Was it all out of your control? Could you have done something? What would you have done differently?
It's never totally out of your control.
Well, the things you can control and the things you can't. So I guess. So what are those things?
I'm just saying that, the gold price is out of our control.
Sure.
Should we have been more proactive? Yes.
Right. With what?
Is that my responsibility? Yes. Did I drop the football? Yes.
Okay.
So what I should have done at the third quarter is reacted quicker.
Right.
And the market was sending signals around self-funding. The market was sending signals about short cycle, more reinforced short cycle.
Was that behavior then new to you, or had you seen that before?
It was completely new.
Right. So hence what's going on?
We had a guy come in.
So if it happens next quarter, you're going to do something?
Well, right now, we had a guy come in hard.
Yeah.
On the long cycle side of the equation,
right.
Cote. So he came in hard, and we put out the feasibility study. We have Sumitomo come in. This is a coup. Nobody's ever done this. We have Sumitomo come in for 30% of the project, put up $200 million US. People were applauding. Yeah. People were standing up, giving us.
Let's do the deal. Yeah.
Oh my God.
Right.
That was in the first quarter last year. By the third quarter. And the gold price falling, and the margin squeezed, and the fact that our cash might be drawn on the balance sheet, they got scared. And they started to send us messages, don't build Cote, which was completely opposite to why they bought the shares.
So tell people quickly about Cote, because it's a pretty big resource, right?
13 million ounces,
right.
6 kilometers off the highway, low grade, a gram a ton, bulk tonnage.
Yeah.
Literally
it's shifting dirt,
beautiful,
right?
Beautiful.
Yeah, simple process.
Beautiful deposit.
Right.
Unfortunately, we haven't got a good set of examples in Canada to say successful. Rainy River, Detour,
right.
Even Malartic in the beginning,
yeah.
Stumbled. It's a great mine
right.
now, but they stumbled. So Canadian history doesn't reinforce. There was no success to reinforce. Sure. So shareholders looked at it, analysts looked at it and said, go to the sidelines. Don't keep your cash, go back, go to 100% short cycle. Free cash flow is everything. Nobody's interested in giving you money to build this if you have an overrun, and put it on the shelf.
What were the capex of?
$1 billion.
$1 billion. Okay, so it's not nothing. But was there a bit of you that said, well, actually, maybe that makes sense? Or you're like thinking, well, come on, guys, 13 million ounces here.
Oh, it made sense. But
so if you built it, how long would you be when would you be in production?
2 years.
Okay.
It's not bad.
Yeah.
But you've got it's human emotion, Matt. We're working on this. We bought this in 2012.
So they want to see.
Well, we got a team. Yeah. We have 7 people from Sumitomo sitting in our Montreal office, seconded on the project. We've made commitments to our partners. Sumitomo is a tremendous partner.
Great.
High skilled partner who have a huge positive reputation, who love this project.
So where is it now?
It's on the shelf.
So you had to listen to these guys, right?
Or they punish you.
Yeah.
And they punished us.
Yeah.
So when we...
Well, hang on. So you listened to them and they still punished you?
No, listen to what happened. So it was kind of unique. They're messaging me and us. They're saying, don't build it.
Right.
We don't make any commitment.
Yeah.
But because of our low margin situation, during the Christmas holidays, gold ran up above $1,300.
Remember? Yeah.
Remember?
Yeah.
We had the chance to put on a hedge for 150,000 ounces of production. Right. It was called a prepay. So we put on a hedge for 150,000 ounces, costless between, at that time, $1,300 and $1,500. So anything below $1,300, we get paid. Yep. Anything in the middle, nothing happens. We get paid spot. Yep. Anything above $1,500, we pay. Which, God, if it went to $1,500, it would be the least of my worries.
Yeah, you would pay it. That's good.
So we received we will receive $175 million US for production that doesn't have to be delivered till 2022.
Right. Okay.
Cost is 5.38%, very low.
Take that. Yeah.
All that is great, Board approves it, and we think we have $700 million in cash. We add another $200 million. We have a cushion. Our shareholders are going to embrace this.
Yeah.
Let's go ahead with Cote. We don't announce Cote, but we do this financing deal.
Yeah.
Market sees it as a
Signal.
catalyst.
Right, yeah.
We're going to announce Cote. Our stock dropped 22% in 2 days.
That's a hit. That's a big hit.
Every major shareholder phoned me and said, "You're going ahead with Cote." I said, "We haven't decided. We're not deciding till March." They said, "Well, why did you do this?" I said, "Because we could.
Right.
And it gives us insurance." And they said, "Don't go ahead with Cote." 2 weeks later, we announced we're going to put Cote on the shelf. Stock recovered everything it lost.
Okay.
Everything.
Same guys. Same guys. Yes. That's a heck of a message. Again, just finishing up, and I say, so you'd have done that differently.
Yes.
Anything else? Any other learnings?
I would say the major learning is listen to your shareholders. I mean, they're not always going to be right, but they're the ones putting up the money. And don't surprise. And I think I wasn't insightful enough to realize I was going to surprise them. And maybe that sounds a little bit stupid. But I honestly thought, and our management team and board honestly thought, that this fantastic deal we did, one of a kind deal,
Yeah.
was going to be something that would allow us to move ahead.
Yeah, yeah.
And we didn't bounce it off anybody because we had to act so quickly. The window was so short. To get it executed wasn't easy, and we got it executed. We were actually so proud of ourselves that when we did it and announced it, we thought our stock was going to go up
work.
10%.
Right. Right.
And it dropped 22%.
Yeah.
So talk about misreading.
Big lesson. You don't make that mistake twice, right?
No.
Okay. So that's fascinating, by the way.
Yeah.
That's a real insight.
Yeah.
Now, I've had the words workaholic and
Right.
similar thrown at you when I ask someone what you're like. So you travel a lot. You're on a plane a lot. What's a typical day for you?
I'm up at 5:30 and I work hard, and I've always worked hard, and I'm in the office every weekend, and I love what I do.
You enjoy it?
I love my job.
Right.
This is a very tough business right now. It's lost its luster, and it'll come back. It's cyclical. I asked this fellow who I knew extremely well in New York, who eventually passed away at the age of 77, worked all his life. So when he had cancer, and I went to the hospice in New York, and I said, any advice in terms of your success? He said to me, "Steve, stay at the table as long as you can."
Yeah.
He said, because we're in a business, and he was in the resource business. Yeah. There will come a point where you can harvest all of that hard work, but you got to be at the table. So strong balance sheet, which we have, good reserves, which we have, which we can monetize, and the ability to stay at the table as long as you can. Now, we become vulnerable, which is where these rumors come from. We have such a powerful inventory of reserves now, 18 million ounces. That are very low cost from a
And they're all similar ore bodies, are they? Or do you have different things going on?
In Roosevelt, over 2 grams a ton, 20 kilometers from the mill. I mean, it's 2 million ounce resource. Cote, 13 million ounces, as I said.
But in terms of the skill sets required you've got all the necessary skill sets. All necessary.
Yeah, I'm not going to call it easy, but
right.
It isn't anything we haven't done before.
Okay.
So when you look at the fact that world reserves, gold reserves, are dropping exponentially, we're replacing 20% of what we produce.
Yeah.
Gold production is still very high, but reserves have dropped tremendously. We become vulnerable.
Yeah.
And people ask me all the time, "Are you a target?" Absolutely, we're a target. Absolutely, people are looking at us. Absolutely, things could happen. We don't comment on it, But obviously, when you have that kind of reserve base, 850,000 ounces of production, and the skill sets that we have and a land package that we've built now, that it's all short cycle driven in most respects. This is a very attractive, and people aren't interested in gold now, but the smart players, the long-term players, will look at this and say, whoa, this doesn't happen every day.
Yeah.
So that's how a lot of the rumors start.
Yeah, I see. Right, so Cote would maybe potential to take you over $1 million.
Cote would definitely.
If that. And just to finish off on that, I got to ask. So you've been told to park it.
Yeah.
Till when?
Till they tell us not to.
Oh boy, I'd be really intrigued to understand that more. But we've got more to talk about because I've got you here today, and we're really pleased to have you here today. What are you measured on?
Share price.
That's it. That's your thing. Are you remunerated the same way?
Yeah, and when we were in the doldrums, I took, I qualify for cash bonuses. I took every cash bonus in shares.
Okay.
I never took any cash out of the company. I've never sold a share, ever.
Right.
And so I'm the largest independent shareholder of the company after 8.5 years.
Okay. Do you think there's any kind of credence in this thought that for investors, not institutional, I'm retail, high net worth family office, those are the guys we're talking to and listening to you today, okay? For them, do they invest into producers?
Absolutely.
You think there's money to be made?
Oh, absolutely. Yeah. Well, when you look at the metrics right now, there's good money that can be made. And again, it's all about sentiment. It's all about momentum. And, our share price performance in 16, 17, and most of 18 was stellar.
You going to get back there?
If we don't get taken out, we will be.
Well,
we will, and we've already initiated cost cutting. We reduced our workforce at Westwood by 300 people. 25% of workforce. Yeah. And we're initiating productivity improvement. We're going back. I say back to the future a bit.
Right.
To 2013-14 when we did all the cuts, and lessons learned. So we need to get to a self-funding model. Yeah, because we can't rely on the market.
Of course.
Yeah.
To a large degree, you can't, right? But you're sitting on a lot of cash. Have you got any debt in there?
We have $400 million due in 2025, but net cash we're $400 million.
Right. Okay.
So we're strong.
Yeah, for sure. That's not a bad ratio. So if I think about investors coming in, new investors coming in today, not guys who've been there a while, today, do you think that you, or generically if you want to, producing companies are more focused on paying down debt rather than paying dividends? Or what are the options for companies like yourself to look after investors when times are good? You're sitting on a lot of cash. People like sentiments like, well, can we have some of that?
Every day.
Right.
Why aren't you buying your shares back?
Yeah. So what's the answer?
The answer is you're right. We probably should be buying our shares back.
Right.
Because when you're at a 0.3 PNAV, the math says buy your shares back.
So you gonna?
We're gonna look hard at it.
Okay.
Yeah.
Okay.
No, it hasn't escaped us. But the problem with being a high-cost producer, even though we've brought our costs down, is that you covet that cash, and so I don't want to be buying shares back and then having to go back to the market and use equity to raise cash again. It doesn't make much sense, but mathematically, when shareholders say you should be buying your shares back, they're absolutely right. There's no argument to that.
Why is the ASIC so high? If I look at other large scale, which you are, low grade, bulk producers, we've seen some quite low numbers. Is it entirely down to the ore, the geography? What are the things that drive that, and why can't you drive it down more?
Well, we were on the path of driving it down significantly with Cote coming on, Saramacca and Roosevelt. We're a low grade. We run anywhere from 0.8 to 1 gram a ton. Wow. So, and we have historically been that. And our mines are old. So that's why Cote was such a big contributor. That's why Westwood, which had some challenges, was supposed to be a big contributor. And then our big discovery in Suriname will help tremendously at Roosevelt. So we were projected to drop from 1,050 down to 850-ish. So huge leverage. Now, I will tell you that yes, we are high cost, but a lot of the peers are catching up to us. So some of these bigger companies are running into the same kind of challenge. Hard rock, low grade, and you know, I'm not saying that we're counting on that to happen, but it is happening.
Right.
We need to get our costs down. There's no question about it. We're gonna continue to do what we're doing. We're hoping that Cote, when we move that into the mix, $700 ASIC.
Wow.
Yeah.
Okay, I hadn't appreciated that.
$700
Right.
ASIC. Our net was 325,000 ounces. You throw it into a base at 850,
Yeah, you're good.
and you're going to bring your average down. Roosevelt with Saramacca, you're bringing in 2 grams a ton soft rock into a mill that paid for itself 8 years ago. So your ASIC comes down dramatically. We had 100,000 ounces of production from Saramacca into Roosevelt on a 300,000 ounce producer at ASIC that's, you know, 750.
Right.
And so that was the strategy. Bodo in Senegal, same idea. Essakane with discoveries around Essakane and Burkina Faso. So there was a plan to bring it down dramatically, but we just got, you know, we ran into a bit of a detour just around market sentiment. And again, we stumbled with Westwood. We had some seismicity challenges there. And, you know, Matt, it's like anything, whether it's a business relationship, a marriage, whatever, if somebody loses confidence, it costs you. And, you know, with the seismicity issue at Westwood that we had in the first quarter, we had some confidence issues in the market.
So, and I understand that. It's a cyclical business, always has been. It's just we can't quite predict the cycles right now. It's a strange market for sure. So you've got to get this balance between running the business, all those things you've just talked about, and the thing you're measured on, which is share price appreciation. You must have a pretty good team around you. I think you mentioned some of them earlier, and you know, got a dependence on them.
Yes.
So if I was to say, what would your message be to investors about what the next couple of years look like? And I also want to come back to, you mentioned a second ago there'll be people knocking on your door. I suspect I know the answer. Any M&A activity going on?
Well, you know, we have always looked at opportunities and have never been able to, you know, we've made a number of offers to companies to acquire them. Right. And it's never really worked out because the premium they were looking for was, you know, beyond our you know, reach. But we've never been able to find anything that really did much for us. And that's not to say they aren't out there, but when you hear Mark Bristow, who I have a huge amount of respect for, or Gary Goldberg, who I also have a huge amount of respect for, talk about, you know, selling assets. These are very smart guys. They're not going to sell their best assets. Sure. What are they going to sell you? They're going to sell you their second or third. So you see a lot of roadkill, and unless you're a miracle worker to take that dead carcass and rejuvenate it, you know, you're really not going to want to buy that. So it sounds good, like, oh, we have shareholders that say, keep your cash and save it for when Mark is going to sell.
You're good, but you're good for a while, okay?
Yeah,
you got a reserve, a huge reserve, right? But at some point,
there's no panic.
There's no panic, right? Okay, you're good for a while. Anyone knocking on your door?
We always have people knocking on our door.
Okay.
Yeah, there's always people looking, and as I say, how could they not? But you know, we never comment on it. And you know, it's a little bit like, you know, it's one of these things where people will be seemingly interested, but again, it's hard to get over all the barriers that seem to be in front of them.
Right.
And
Like, what do you mean? Like what?
when Randgold and Barrick did their new no premium deal, they set a standard at the Denver Gold Show a year ago. And so, okay, Randgold and Barrick did a no premium deal. Let's do a no premium deal.
Yeah.
Wow. I'm sorry, but
What does that look like?
That doesn't work.
Yeah.
Right?
Yeah.
And the market punishes high premium deals. So it's not quite as easy as people might lead you to believe, right? You're trading at a 0.3, 0.4 PNAV. Hard for you to use your paper to buy an asset. It's very dilutive. You become very attractive to a high PNAV company that's saying, I don't want to pay you a premium because Mark didn't do that. Mark and John didn't do it. Well, they did it for different reasons, and there was a great deal that they did. And they were extremely clever the way they structured it. My hat's off to them. It really was a very clever deal. But that doesn't mean that sitting with IAMGOLD shareholders that we're going to accept a no
subpar.
Yeah. Why would you do that? Why would you do that?
Well, hopefully you won't.
No, but there are. I mean, again, if gold does start moving, and there is momentum.
The only sense of that, because if I talk to uranium guys, if I talk to copper guys, nickel guys, so everyone's got all commodities have got their problems, right?
Right.
It's woe is me. It's the price. It's not me. Have you got a sense of what the gold market's doing?
I think the gold market has more upside, and if you follow it, and I know you do, I've been watching it, especially even over the last couple of days. Gold dropped down to around 1270.
Yeah.
It seems to have a floor between 1250 and 1270, and today, last time I looked, it was up $10.
You don't think anyone's controlling that? You think that?
Well, there are lots of conspiracy theorists.
Well, that's what I'm getting at.
Who knows? It seems when it goes above 1300,
someone doesn't like it.
Some wingnut sells it in somewhere in a drop. Somebody sells $1 billion worth of gold, and all the conspiracy theorists come out.
Yeah.
And I have no idea. This much I do know.
Okay.
That the only thing that matters is the dollar, U.S. dollar. It's the only thing that matters. I mean, you can have a warship show up in the Straits of Hormuz and with Iran, and nothing happens. But if the U.S. dollar drops, gold moves up. And if there's any sense that the U.S. economy is going to weaken and that the U.S. dollar is no longer the haven,
right,
gold will move up.
So if you're Canadian, right?
Yes.
Okay, so I can ask you this without fear of retribution. In the U.S., you got polarizing politics at the moment. You've got the Republicans who are very sure that Donald Trump is changing the nature of business.
Yes.
He's freeing people up to do good business, especially mining, right? And you got the Democrats who are fearful that some of his policies will lead to more debt. It's some extraordinary number at the moment, and his policies internationally as well. So, given that arena, that political arena, and what it looks like today, what's the call you're going to make on the American dollar and where it's going? You got one guy, because we're going great guns. Trump's doing things for our market, and you got Democrats with their view. What do you think is going to happen to the dollar?
So I spent 10 years in Texas, and I had the same style of management. I spent a lot of time in the field, and I remember sitting in Louisiana, and we had some issues, and this guy said, Mr. Letwin, put the alligator on the table and let's talk about it. And I said, okay. Right. So here's the alligator on the table.
Right, that's a good one. Okay.
Here's the alligator on the table. $22 trillion in U.S. debt. Worldwide debt at $250 trillion. Every man, woman, and child on the planet, $88,000 US for the debt. Okay? No one seems to notice. No one seems to talk about it. You hear conspiracy theorists on the gold side, the gold bug, saying there's another 22 trillion that's not even on the books. Our Canadian government is spending like drunken sailors, highest debt in history, and the U.S. doesn't seem to care. I believe in my heart of hearts that someone will wake up one morning and say, there's too much debt. And with Trump using the US dollar as a weapon, you see Russia, China de-dollarizing.
Yeah, a lot of that.
Yes, and if you got the shit kicked out of you on a regular basis by Trump, which he likes to do, you will find a way to hit him between the eyes. And these countries, smaller than the US, are going to hit him back. And I worked a lot in China and Hong Kong. I worked for 5 Hong Kong billionaires. There's one thing you don't do. You do not cause them to lose face. Right. You do that, similar to the Japanese, they will pay you back. Yeah. And he's going to have...
And they'll wait.
He's going to have his comeuppance. He's got some great business ideas, but this bold, brash, kick the shit out of my friends attitude, which got him the most hated guy in New York State. They hate him. It's going to come back. Now, when does that happen? I don't know. But if the US dollar does start to turn, just like gold did, the gold price will move through $1,400 and $1,500, and it'll do it quickly. All right.
That's a great interview. Thank you very much for your time.
Yeah.
I know we didn't spend much time on the company, but I think it's a very well told story in the marketplace, but I think people will appreciate an insight, just a small insight into your thinking, your logic, and your management style. So I appreciate that.
Thank you.
Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest, and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.